Good afternoon. This is Rich Nelson with Allendale. This is Friday, January 6th of 2012 here. Obviously, all eyes were on this economic information we got this morning here. Very good news regarding jobs. It drops us as far as unemployment as well here. Key issues right now is the trade is saying the U.S. economy is, probably a little better than expected here just a few weeks ago here. So obviously we've got a renewed sense of optimism with the U.S. economy. U.S. dollar up 29 here today. That did post new highs for this current uptrend here for the U.S. dollar. And of course, this will be one of the highest closes we've had since early January, starting out of 2011. So quite a interesting stuff here. As far as that general tone, U.S. dollar obviously stronger. Did add one minor layer of negativity here to the today's action. Corn unchanged last trade, beans down 15 and wheat down 4.5. We'll point out, of course, the Minneapolis wheat contract down quite a bit more than that 4.5 post on Chicago. There is talk that the CME Group, in fact, there is a circulation out right now, a paper out, suggesting that they are ready as of January 17th to expand maximum position limits for each trading entity. So the trade is saying, well, that probably will allow some of these guys to put more back into Chicago wheat and the KC contracts and get out of that Minneapolis. Keep in mind, a lot of these funds here trading large positions were limited by the number of contracts they had to be in, that they could be in for Chicago or for instance, KC. So they moved to Minneapolis there in the past few years as being a substitute here once they max out their Chicago positions. As far as other information now for the grains, Argentina, no real major changes for the midday models here. You will note one suggested slightly more rain. So bottom line here as far as this Argentina issue here, the trade is going to wait and see now to see what happens with this Monday rains for Argentina. So for right now, we do have some negativity kind of creeping back in here. But we'll point out this is not all of a negative issue here. I should say all things are not negative right now in this market. Estimates for next Thursday's crop report and supply-demand report, those came out here today. The average trade guess for corn ending stocks suggests a decline from last month's 848 down to 749 million bushels. So a decline in corn ending stocks. Soybeans are seen increasing slightly from 230 to 233 million bushels. The average trade guess suggests a slight decline for wheat, going from 878 to 842 million bushels. So we will point out those are bullish expectations for next Thursday's grain reports. However, as we talked about many times in the past, the trade has been surprised by USDA's actions in each of the past 5 years. So while we have lots of bullish information from the average trade guess, bottom line is the market's been really surprised so many times by these USDA reports on these major ones that it's unlikely we'll see many people really jump on the bullish bandwagon because of these estimates. For cattle, obviously this morning's economic information was important. It was great to see. And the trade is saying, well, it's good to see. Does that mean extra beef demand as well? And we can't say that that situation has improved at all. Midday beef report actually declined today, again, down 96 for choice and down 53 for select. We also did trade cash cattle in the plains here today, down $1 from last week at 121. So even though we've got good U.S. economy news here, the trade is concerned here. What's going on this cattle market? We do have a couple of different things here. Not only still trying to work out the slaughter issue here, getting rid of those cleaned up cattle from the past couple of weeks. More importantly, though, is we have people looking at this weight issue. And we talked about this 2 or 3 nights ago, the fact we have these very warm temperatures running about anywhere from 7 to, in fact, as much as 16 degrees higher than normal, depending on the location. That has many people suggesting that this normal decline in weights, which always happens during winter, maybe won't be as severe as normal. So that may put a couple extra pounds on this spring market than what people were expecting earlier here. So that's something we will talk about here at the conference. Certainly, it's going to be a big issue there. Weight gains for this whole beef market, and could that possibly disrupt this better economy and better beef demand issue? Over on the hogs, up 10 cents today on the Feb contract. We can point out, as far as the hogs go, a good Saturday slaughter here expected, 344,000 head. That's going to be the biggest number here in weeks. So it's good to see Packers getting back on the horse, so to speak. So it's nice to see on this end here. So as far as key issues right now, obviously we've got Argentina here lined up. We have next week's supply demand report, and of course we have Allendale's January 20th and 21st annual Outlook conference here. This one is certainly going to be a very exciting one here. We're covering all these issues here. One thing that Drew's going to mention is this whole U.S. Midwest weather forecast. Will this La Nina bring slightly dry conditions to the northern Corn Belt like it normally does? That'd be very exciting to see, and Drew's always a big draw and always a very exciting speaker here. So we look forward to see what he has to say on that issue here. If you have any questions about these topics or markets, marketing in general, feel free to give us a call here at Allendale. That number is 1-800-262-7538. This is Rich Nelson. Have a good, happy, and safe weekend. I look forward to seeing you guys again here Monday.